So, good evening once again. Last week we talked about and we also discussed cost of capital, where we are able to explain what is cost of capital, and also where we are able to explain the components of the cost of capital, and also where we also discuss the method that we are going to use for the to get the cost of capital, where we mentioned the dividend valuation model, and also we mentioned the capital asset pricing. And I think we are still under the dividend valuation model, when I able to explain that the cost of capital can be calculated using the growth rate and also without the growth rate. And after that, I also explain that we have certain things that we need to be careful with in examination condition, that where the market value is given in terms of cum diff. So I want us to recap so that everything needs to be staying into our memory so that I won't forget. I said when you are given a market value in terms of a cum diff, so it means that the dividend is incorporated in that market value given to you. When you are given a market value in terms of what cum diff, this implies that the dividend is what incorporated in the market value given to you. Then the fact remains the same, that such market value, we don't use it. Then I said do not use it. But before you can go ahead to use such market value, it means that the amount of the dividend, you have to deduct it from the given market value, so that as you are doing so, you've already converted to what? To market value x diff. That is what I explained last week, that we don't need the market value x, we don't need the market value cum diff. Rather, we need what? The market value x diff. So if the examiner is giving you market value that contain the cum diff, it implies that the dividend is already incorporated in that market value. Then you don't need to use it, but you have to look for a way to what? To convert it back to what? To x diff, to x diff, to x diff. That's what I explained yesterday. And then how will you know whether the market value given to you is what? Is cum diff, is cum diff? If suppose the examiner is giving you the question and they are telling you that the dividend is yet to be paid, or the dividends are going to be paid shortly, it means that such dividend have not been paid. Then the information given to you, the market value given to you, is in terms of what? The cum diff. The examiner can tell you that the dividend will be paid very shortly. It has not been paid. They only give you the information that this has to be paid very shortly, or the dividend is due for payment. It means that it has not been paid. It has not been paid. Definitely, the market value given to you, it is what? Cum diff. Automatically, such dividend, you have to deduct it from that market value so that you can get your what? Your excluding, which is what? X diff. X diff. Market value X diff. Are we there?
Yes, sir.
So, and I I think we've done example 1 and also example 2. So let's look at this example 3. Who can read it for us so that we start from there? Who can read it for us, please? So that the class will be very interesting and interactive. One person should read it for us, please. Okay, that person should go ahead.
Example number 3. 10 million
Okay,
ordinary 10 million 10 million one naira ordinary shares currently valued at 300k per share.
no.
Finance
300 kobo. 300 kobo.
300 kobo per share. Finance Dynamic PLC. A dividend of 6 million is due to be paid. We are required to calculate cost of equity.
Okay. So if you look at this scenario, we are told that 10 million one naira ordinary share currently valued at 300 kobo per share. Finance Dynamic PLC. A dividend of 6 million naira is due for payment. So if I want to analyze this, if we want to analyze this 300 kobo, who can tell us this 300 kobo represent what? So let this class be interactive, please. This 300 kobo represent what?
The market value of the shares.
Market value of the share, which is the MV. Market value of the share. So this market value of the share, is it cum diff or ex diff?
It's cum div. It's cum div.
Okay, why is it a cum diff?
Because the dividend is still an outstanding
Okay, God
payment.
bless you. God bless you. Because we are told that a dividend of what 6 million is due for payment. God bless you. God bless you. So if we are told that a dividend of what 6 million is due for payment, and the examiner say you are required to calculate the cost of what? Equity. So when you want to calculate the cost of equity here, is it with growth in dividend or without growth in dividend? Go ahead, please.
Yeah, since they did not specify there is growth, we will just calculate without growth. That's dividend valuation method.
Okay, God bless you. Because we are not giving a growth rate, and also the information that we are going to use for the growth rate is not what is not given. Because sometimes the examiner will not give you the growth rate in the question, but the information that we are going to use for the growth rate will be given to you. Like when I said the examiner can tell you to use what they call Gordon's growth model, Gordon's growth method, or Gordon's growth approach to calculate your growth rate. And also they can tell you to use what they call historical or pattern method to calculate your growth rate. It means that if the examiner wants you to use the growth method under the dividend valuation model and the growth rate is not given, the examiner will give you the information regarding to that growth rate. But as it is here, we are to calculate the cost of equity without growth rate, because even though the growth rate information is not given. And if you remember, I gave formula that when you are calculating the cost of equity without growth rate, we said we have what is called D naught all over what? Market value X diff. Market value X diff. That is D naught all over what? Market value X diff. So therefore, the cost of equity will be equal to what? The dividend. So how much is the dividend?
6 million.
6 million naira. 6 million naira all over market value is what? How much is the market value? How much is the market value? Go ahead, please.
The market value is 300k per share.
Okay, it means that 300 kobo. 300 kobo. So when you say 300 kobo, 300 kobo, if you want to convert it to 100 kobo is 1 naira. It means that 300 kobo means what? 3 naira. Are you with me? 300 kobo means what? Hello?
3
Naira.
naira.
3 naira. So because 100 kobo is 1 naira, then 300 kobo it is what? 3 naira. So you now say 3 naira per share multiplied by number of share. Number of share is how many share? 10 million shares. 10 million shares. Then minus 6 million naira because you want to take it back to XDIV. So what do you have, please? 6 million all over 30
24
million.
million.
30 million minus 6 million. Because this 6 million that you are given, it is not dividend per unit, it is the total dividend. That is why the value is big, 6 million. Then this 300 kobo, you have to multiply with the number of share as well to get the total value. Then your cost of equity become 6 million all over what? 24. So what do you have, please?
0.25.
So in percentage, that should be
25%.
25%. 25%. That is what the examiner is asking you to calculate here. So in exam condition, this is how it looks like. But just that the examiner will not give you one. They are going to use it as a scenario base in such a way that they will give you something like the cost of equity, the cost of debt, preference, if any. Then they will not say, okay, maybe you should calculate the weighted average cost of capital that you are going to use to appraise the project, So the bottom line is that you need to know it separately. You need to know it separately before we can now bring all the three together. So I think we've done this as well. This one. Okay, no problem. We can quickly do it. I think we did it last week, but we can quickly do it. So who can read this one for us as well so that we continue and then we move to another one so that one person
Salami
should,
PLC.
okay,
Salami PLC is currently trading at 12 naira, 10 naira kobo per share.
okay. Let's be
A
analyze it
dividend
one after the other. So this 10 naira and this 12 naira 10 kobo represent what?
That's the market value of the share.
Market value of the share. Go ahead, please.
of 2 naira per share was paid 1 year ago, and the
Okay,
dividend will be growing at 5% per annum.
okay,
Okay.
continue.
This growth in dividend is expected to continue. The
Okay,
company is expected to pay the next dividend very shortly.
very
Calculate
shortly.
the cost of, is that equity or capital?
Okay, let me scroll down.
Calculate the cost of equity.
Okay, so if the examiner is telling you to calculate the cost of equity here, is it with growth or without growth?
with growth.
With growth. So if it is with growth, we say cost of equity become what? Dividend into what? 1 plus what? Growth rate, close the bracket, over what? Market value plus what? Growth rate. So this is the formula to calculate cost of equity with what? With growth rate. So if we want to analyze it one after the other, we now ask ourselves, this market value given to you, is it ex-div or cum-div? Hello?
It is
Ma-
X. It is cum div. Cum div.
Why is it cum-div?
Because the dividend was paid a year ago, and
Okay,
they said in the dividend is expect. Okay, wait. So they said, and the dividend have been growing. Okay, the growth. The company is expected to pay the next dividend very shortly.
God bless you. The dividend that was paid 1 year ago, it is 2 naira. But at the same time, we are told that that dividend that you see as that 2 naira have been growing at 5% per annum. So they now said this dividend is expected to continue. And if the dividend is expected to continue, it means that from 2 naira that was paid 1 year ago, the next one, that 2 naira has to increase by 5%. That's why they say the dividend have been growing at 5% per annum. So this growth in dividend is expected to continue. So the company is expected to pay the next dividend. You know, after the company paid for that 2 naira 1 year ago, the next one, the company has not been paid. The next one has not been paid by the company. Then that one is what the examiner is telling us, that the company is expected to pay the next dividend very shortly. So it means that though whether they will pay it now or pay it later, the bottom line is that the dividend has not been paid. The next one has not been what? Paid. So that is why we say the market value given to us, it is what? Cum div. It is cum div. So therefore, cost of equity will be what? 2 naira into 1 plus the growth rate, which is what? 0.05, close the bracket, all over market value, which is what? 12.10 minus that dividend that's growing. So that should be 2 naira, 5% of 2 naira. That should be 2.1, because it has increased from that 2 naira. Then plus growth rate, which is 0.05. Any question, please? If there is no further question about this, then calculate it and let us get our cost of what? Equity. Any question? Hello?
Ah,
My
The cost
question
of equity
is
is 26%.
Okay, 26%. 26%. So this is what the examiner is asking us to do here.
sorry, please.
So
My
any
question.
question before we?
Yes, I have a question.
Okay, go ahead, please.
My question is it because it has grown to 5%, as it has been growing at 5%? That's why we use that 5% with the dividend to
Yes,
get.
because the examiner stated clearly that the growth in dividend is expected to continue.
Okay.
Have you seen it?
Yes. Okay.
And they also mention it here that it is 2 naira per share, was paid 1 year ago, and the dividend have been growing. You know, when they say dividend have been growing, it is 2 naira. They now say the dividend have been growing at 5% per annum. It means that you no longer 2 naira again, because it has been growing. every year it will be going for 5%, 5%, and they said the dividend is expected to continue. Is it
Okay,
clear?
okay. Yes, it's clear. Thank you very much.
Okay, you're welcome. So, if there is no further question on this, let's move on. So, this is another thing that we also need to discuss under the cost of what? Cost of capital when it's come to what? The what's it called? Dividend valuation model. And here I explained that how to derive growth rate in what? In the dividend valuation model. In the dividend valuation model. And if you look at the way I prepared this note, I said if the growth rate is unknown, if I said unknown, who can tell us what I'm trying to explain here? If I said unknown, the word unknown. So I want the class to be interactive. That is why I place. If the growth rate is unknown, who can tell us what I am trying to explain? If I said the growth rate is what? Unknown.
It
Then I
means if the growth rate is not given.
Okay, God bless you. So if the growth rate is not given, look at it now. So that is what I said the growth rate is unknown. So if the growth rate is not given, the following can be used to determine the growth rate. I explained this earlier that if you are not given a growth rate, and probably the examiner wants you to use the growth rate, automatically the following can be used to determine the growth rate. Number one, we call it historical slash what? Pattern dividend, past dividend pattern. It means that the examiner will give you information about this if the examiner truly wants you to use the word the growth rate and the growth rate is not given in the question, the examiner will give you information regarding to this. Number two is that you can use the method called Gordon's growth model. Another name for that Gordon growth model, we call it what? Retention model. Retain retention model. And I also explain further that the historical or past dividend pattern, this method assumes that the past pattern of dividend is a fair what indicator of the future, and the formula is denoted by growth rate n minus 1. LD means latest dividend all over ED means earliest dividend, close the bracket, minus 1. And I break it down here for us to understand it clearly that N represent the number of year of dividend growth, G represent the growth rate, LD represent the latest or current dividend. Is that you call it latest or current dividend? ED represent earliest dividend, call it historical dividend. And one that you see in that formula, it is what? Constant. It is constant. It is constant. So, and I come here, I give examples so that we can walk through it and see how we are going to apply it. So who can help us to read this example one?
The company currently pays a dividend of 80 kobo
60
4
kobo.
years. Okay, 60
60
kobo
kobo.
4 years. 60 kobo 4 years ago. The dividend
Okay.
was 40 kobo. Estimate the annual growth rate in dividend.
Okay, God bless you. A company currently paid a dividend of 60 kobo 4 years ago. The dividend was, sorry, a company currently pay a dividend of 60 kobo. That's one sentence. They now said 4 years ago, the dividend was 40 kobo. Estimate the growth rate in the what? In the dividend. So look at this question very well. You know, when you want to calculate the growth rate, always write the formula so that we know what we are trying to do here. The formula, it is what? N minus 1 latest dividend over what? earliest dividend minus 1. So from this formula, LD means latest dividend. From this information given to you, what is your latest dividend? Then the ED means earliest dividend. Who can try? What's going to be our what? Our latest dividend. Hello?
Dividend.
The latest dividend is 60 kobo.
God bless you. Because latest one means what? Current. Latest one means current. Latest one means current. That's what I explain. That is what I break down here. You can see LD, latest or current dividend. Latest or current dividend. Latest or current dividend. So meaning that this 60 kobo represent our what? Latest dividend. Then what is going to be our earliest dividend?
40 kobo.
40 kobo. 40 kobo. Because we are told that 4 years ago the dividend was what? 40 kobo. Are we together? Are we together?
Yes, sir.
Okay. Hope is cleared. Hope I'm not moving fast.
It's clear. Thank you, sir.
Hello. If you
It's
are
clear,
not
sir.
clear, if
It's
you are
clear,
not
sir. We
clear,
are following you, sir.
okay, because it is very, very important that you need to get it from this from where we are now, because we are still going to combine everything together so that it will become complex. It will become complex. But if you don't know it from this point, so the complex one will look somehow. So you have to what? Familiarize yourself with it the way it is now, so that by the time it turns to a complex one, you should be able to bring it out one after the other. Because it will be very complex in a manner that they will write a full story, but at the end of the day, you'll be bringing it out one after the other. Hope is cleared.
Yes, sir.
So let's do it together. The growth rate will now be equal to what? So that the class will be interactive, please. The growth rate will be equal to what?
4 minus 1 root.
Sorry. N minus 1.
N minus 1. I've put the formula already.
4 minus
Just
4
for us to just
minus 1.
Okay. 4 minus 1.
within that 12 to
that person should move, please. I'm waiting.
4 minus 1 root.
4 minus 1.
Root
Are we
16
all
over
agree?
4.
Hello. It's just for us to just try.
Four minus one root 0.6 divided by 0.4 minus one.
And what is going to be our answer then? It's a minus something, so that we can just leave that place.
I got 0.79.
Another person should confirm that, so that we'll close the chapter and let's move to. I only use that one as a basis for us to understand what we are actually explaining.
Let's someone else confirm the answer.
Another person should confirm, please. Another person should confirm. Hello? Hello?
Hello,
I
sir.
got 14. I got 14.47%.
Okay, so let's do it together. So what's going to be our end?
That's 4.
Why is it 4? My
That's not
end
the
is
number of
5.
the your hen is 5.
Yes.
How come?
A company currently pay a dividend. So this one that they currently pay, I think one person should mute. This thing is giving sound. A company currently pay a dividend. So this dividend that they currently pay, that is 1 year. They now say 4 years ago, the dividend was 40 kobo. 1 plus that 4, that is 5 years. Are we good to go?
Okay.
Because this one is the one that they currently pay, current one. But there is 4 years ago before. So all the number of years become 5. Then we say minus 1. The latest dividend, 60 kobo, all over earliest dividend, 40 kobo, then minus 1. So what do you have? So this one will become 4 root 60 over 40. Since it is kobo, so I can decide to put it as 60 over 40. But if I want to use 0.6 and 0.4, still the same thing. Then what's going to be our final answer? What's going to be my final answer?
0.84.
Another person should confirm now.
This minus 1, is it under this? Is it under the root?
No, it's a standby. So what we are going to use
Standby.
that? We are going to
Is
do,
0.69.
is that what? Hello?
10.66%.
Okay. So if that is what we get, then no issue. Let's move to, let me look for, if I can see calculator. Let me also confirm it here myself. Let me also confirm it here so that I'll be on the same page. So what I got here is 12.5%. Are we on the same page? Hello?
Get your 12.5%.
You
So
said
I
what?
got 10.6% also.
I got 10.66%. How did you get your 12.5%?
Okay. What I did is this. 4 shift 4 shift. I don't know how your calculator is, but using this calculator, 4 shift raised to power, then 60 divided by 40. I have, sorry, minus 1. Oh, sorry. I have 10.6 something. So I think that person is right. 1.5 minus 1. So times 10. So 10.66. So approximately to 11%. So are we good to go?
Yes, sir.
Approximately to 11% as a number. So example 2. Who can help us with this example 2? One person should help us with this example 2 so that we move on, please.
A
Hello.
company has the following data for dividends. Year 2016 dividend is 30 kobo, 2015 29 kobo, 2014 28.5 kobo, 2013 26 kobo. In 2017, the company has just been paid a dividend of 82 kobo. Calculate the growth rate in dividends.
Okay, God bless you. So let's read it together once again. A company has the following data for dividend. So this data that you see that a company is, the examiner is giving to you, we call it what? Historical or what? Or what's it called? Pattern. That's why they call it the data. This is the historical data for dividend. And we have dividend 30 kobo, 29, 28.5, 26. And in 2017, the company has just what? The company has just been paid a dividend of 32 kobo. Calculate the growth rate in what? In dividend. So your formula, let's write the formula together. Growth rate will be what? Let the class be interactive, please. Growth rate will be what?
G is equals to n minus 1
N minus 1, okay.
latest year dividend over base year dividend minus 1
Latest dividend
minus base year.
over base year dividend, or we call it earliest dividend, minus 1. Then, if we want to solve this, we say growth rate become, what is our N? What is our N here?
Our n is 30 kobo.
N, number, N.
Our
Okay,
N is
n
5 years.
1 2 3 4 years.
So our N here, it is 5 years. This cannot be 4. Is it 4? It cannot be 4. Let's see. 1, 2, 3. Okay, our N is 4 years. Our N is 4 years because if we count from 2013 to 2014, that is 1, right?
Yes, sir.
2014 to 15, that is 2. 2015 to 16, that is what?
3.
3. And 2016 to 2017 that's given to you, that is what?
4 years.
That is 4 years. Hope is clear.
Sir, it's not clear. Oh.
I do not agree,
Because
sir. I think it's
sorry,
five
I
years.
I did not agree with it because I believe that this formula. Can I continue?
Okay, continue, please.
I believe that this formula, when you use n minus one, that is when it has the years. But in the situation whereby you can use only n, that is when it
Okay.
is when it talks about the growth, the rate of growth. Like what you just counted now. I believe if we are to go by what you just counted, then it should not be
Mm.
n minus one. Rather,
So
that's
if
just
I
my
can't,
observation.
no, if I can't see, if I can't want one, eh, 2, 3, 4, that is 4 years. Then I will not use -1. But if I said n minus, if my n is, see, let me write it this way. If I say growth rate, I can say growth rate is equal to n over latest dividend over earliest dividend -1. The formula is still the same thing, meaning I'm counting from, this is 1 year, 2 year, 3 year, and 4 year. Then I will put 4. Are we there?
Yes, sir.
Then if I want to consider it based on, I'm counting 1, 2, 3, 4 plus the current year they pay, making 5. Then I will say 5 minus 1. That is still 4. Are we on the same page now?
Oh, okay.
Hello? Hello?
Hello, sir.
Hello. Hello. You can
Are
hear
we on
me.
the same page now?
Sorry, what you meant was that if you are counting it as numbers of years,
Yes.
that is when we use the n minus one.
Yes. At the end of the day, my final answer there will be 4.
Yeah, but if you are counting by growth, hello sir, do you understand what I
Go
mean?
ahead. Go ahead.
If you are counting by growth, so I guess that
Okay.
formula should be only n. You know
And
what
that's
I
what
meant
I
by growth
explained
is that,
here.
yeah, yes,
That's what I
okay sir.
explained here. I said, if I'm counting by the way it grew from 13 to 14, 1 year, 14 to 15, 2 years, 15 to 16, 3 years, 16 to 17, 4 years, I will just write n. But if I'm counting with the number of years given to you, I will write 5. Then -1, I will still get my 4. Are we on the same page now?
Yes.
So it depends on anyone. That person should move, please. It depends on anyone that I want to go with. Is that you say, based on the number of years given to you, I will say 5 minus 1. The latest dividend, what is my latest dividend?
32 kobo.
The latest one is
32,
32
kobo.
kobo.
32 kobo. All over my earliest dividend. What is my earliest dividend?
26 kobo.
26 kobo.
26, 26 kobo. Then everything -1. Everything -1. So what is my final answer? What's going to be my final answer?
Yeah, that should be 5 point something percent.
So let me punch my calculator as well. 4 shift raised to power 4 shift raised to power, then 32 divided by 26. So minus 1 times 100. I have 5.32 if I'm not mistakenly, but approximately to whole number, then I have 5%. Is it correct?
Yes, it's correct.
It's correct. Hello.
It's correct. It's correct.
Okay. So 5%. So my growth rate become 5% as whole number. Then let's continue. Who can read this one for us?
Ashiru PLC has 100 million naira ordinary shares. Details of company dividend per share over the most recent 4 years are as follows: year 2016, 2015, 2014, 2013. Dividend kobo 30, 29, 28.5, 26. The current market price is 22.35. A dividend of 30 naira per share is expected to be paid very shortly. Required: calculate, estimate the growth.
Okay. Another person should also read it. Maybe we're on the same page. Maybe a lady.
Ashuru PLC has 10 million one ordinary share. Details of the company's dividend per share over the most recent 4 years are as follows: year 2016, 30 kobo; 2015, 29 kobo; 2014, 28.5 kobo; 2013, 26 kobo. The current market price is 2 naira 35 kobo. A dividend of 30 kobo per share is expected to be paid very shortly. Required: estimate the growth rates.
Okay.
Then B, calculate the cost of equity.
Okay, good. So if we want to analyze this, the questions there we should calculate the growth rate and also we should calculate what the cost of equity. Now, let's look at what we are going to do. If we want to calculate the growth rate, then our formula should be growth rate is equal to n minus 1, right, into latest dividend over earliest dividend, then minus 1. That's the growth rate. Then if I want to go by, that is A. If I want to go by B, B say we should calculate what? The cost of what? Equity. So the cost of equity will become D naught, open bracket, because I have to put the growth rate. Because the examiner is already tell us to calculate the growth rate. It means that it is with growth rate. Market value of what? XD plus growth rate. So the question now is the market value given to us. How much is the market value given to us?
2.35.
That 2.35, is it cum diff or S diff?
Div.
Why is it cum diff?
Because they said it will be paid very shortly.
Okay, they said dividend of 30 kobo per share is expected to be paid very shortly. It means it has not been paid. Are we all agree? Can we move on?
Yes, sir.
Yes, we can move on.
Okay. Okay. So then let us calculate our growth rate first. so that we can incorporate that growth rate in the B part. G become, what's the number of years? What's our number?
4 years.
4 years. Why is it 4 years?
5 minus 1.
5 minus 1. Are you sure?
They have given us 4 years, sir. They said the most recent 4 years are as follows.
Okay, it's 4 years.
4 years. 4 years. The details of the company dividend per share over the most recent 4 years is as follow. So this is what's it called? 13, 14, 15, 16. And let me now bust your brain. Look at this 30 cover that you see here. Have you seen it? Hello, the person should mute, please. A dividend of 30 kobo per share is expected to be very shortly. This 30 kobo that you see here is the same 30 kobo that you have in 2016. Do you agree? Hello.
Yes, sir.
It means
Yes,
that,
sir.
it means that this same 30 kobo that they say that is expected to be very shortly, it is the dividend of 2016 that has not been paid. So that is why we can say it is a word 4 years. Then if I want to go by growth, I will say 13 to 14, 1 year, 14 to 15, 2 years, 15 to 16, 3 years. So it means that, and or everything that will be here will be 30. Then if I want to go by the number of years given to me, I will say 4 years. Then by the time I remove one, I will still get what? 3. So what's my latest dividend?
30 kobo.
30 kobo. Earliest dividend
26 kobo.
26.
26 kobo. Then we bracket and subtract 1. So what's your growth rate? Growth rate, please. Hello? Hello?
The
Four
growth rate is
percent.
4.88.
So that means we can say 4.9, one decimal, right?
Yes, sir.
4.9%. So this is my growth rate. Then I will now move to cost of equity. So the cost of equity now become, what is our what's it called? The dividend, the most recent dividend. Do you know? That's the current dividend. 30 kobo, right? 30
Yes.
kobo, open bracket, 1 plus the growth rate. It is 4.9%. 4.9% means what? That is a 0.49, right? 0.049. Am I correct? 0.049. Close it. All over. What's the market value? What's our market value? Hello?
The market value is 2.36. We have to convert it to XDIV.
2.35. 2.35. Then we remove that dividend, which is 0.3, because they said it has not been paid. So we have to convert it back to XDIV. Then plus the growth rate, which is 0.049. So what's my cost of equity? If you punch your calculator very well, what's going to be my cost of equity? Are we tired?
No, sir.
What's my cost of equity?
It's 20%.
18 what?
I said 20%.
Whole number. Is it whole number?
Yes, sir.
20%. So that is what the examiner is, or the question is actually asking us to do. Are we tired?
No, sir.
So then we are still under what's it called? The cost of capital, but we have done with the dividend valuation model under using the historical method. So we are going to discuss about the Gordon's growth model. Gordon's growth model. But let's see, by the grace of God, tomorrow we are going to continue from where we stop, because I think my device, I have just 12% left. So any question before we call it a day? So by
No, sir.
tomorrow, grace of God, I will schedule. Maybe it's not going to be in the morning tomorrow, because instead of taking you in the morning, that's why we schedule it tonight. But tomorrow we are going to schedule a class as well, that we can continue from where we stop. And as you can see, we have the complex question that we are going to merge, that we merge everything together. That's what I said. We have to be taking it one after the other, the cost of debt, before we can now turn it to a complex question. You can see these are the
Thank you, sir. Really appreciate you, sir.
Thank you very much, sir. Hello.
Thank you,
Hello,
sir.
sir. Hello. Hello.
hello. So
Thank you,
Thank
sir.
you very much, sir. Really
Thank you
appreciate
very
you.
much, sir.
God bless you, sir.
Thank you very
if
much.
you have question, please feel free to ask your question. Feel
Please, can
free,
you please
but
drop those?
any question, please.
I said, please,
No,
sir,
sir.
can you please drop those questions that we solved for us to go through it on our own again?
Okay. Our admin will communicate on that.
Okay, okay,
They
thank
will communicate on that, and probably I will give assignment what you are going to do, that will be separated from the one we did in class. I will
you.
just
Okay.
try as much as possible to replace the question so that we can familiarize ourselves with different scenarios. I think that one is fine.
Yes, it's fine.
Hello,
Thank
sir.
you very much.
Hello, sir. Hello.
Hello, go ahead, please.
I said I don't know. Probably maybe you could just send a video of the classes. Probably and those people that those of us that joined the class late, so we could like start from the beginning of the class.
Can you stop the
Okay, you
recording?
mean to this class?
Yeah, the recording, the for the previous
Okay.
class.
Okay. The previous class, I think if you visit our YouTube page, you will see the previous class and as well as today's class. Admin
Sorry, can
will
you
do
stop the
that.
recording?
Hello. Hello. Hello.
Hello, sir.
So any other question, please? Any other question?
No question from my end, sir.
You can ask your question now. So I'm waiting for your question so that we can address it accordingly. So if there is no further question, then so we say good night and please study hard. And if you have any challenge, don't hesitate to get back to us. Thank you. So bye.
Bye, sir.